If you've been anywhere on social media recently, you would have seen the absolute meltdown from all these property investor influencers over the recent changes to negative gearing and the capital gains tax discount. We're here today to look at the damage, react to some videos, see them cry, and I'm here with Chels from HouseYou.
Hi, thanks for having me. Let's get out the little violins this afternoon.
Yeah, the little woe is the property investor. Before we get started, I'd just like to make everyone aware that there is going to be a demonstration against the demolition of public housing in Melbourne on the 30th of May, 11 a.m. at State Library. Basically, we are protesting the state government's plan to get rid of 44 of Melbourne's high-rise public housing flats and replace them. We've been pretty busy organising residents, organising people to get down, to get organised, and tell the Labor government that we don't think we should be privatising public housing in a housing crisis. But speaking of housing crisis and speaking of privatisation, we're here today to see the absolute mess property investor TikTok and Instagram has been over the past week with the changes. So without further ado, maybe we'll start off with the Jack Donny.
My bestie.
There's a lot of people worried about the capital gains tax changes, negative gearing changes, and really just the overall tax landscape in Australia. But if I was a betting man, I'd like to bet that there is a very, very good chance that those changes either won't get in their current form, or if they do get in,
If I can
Labor
just jump
won't
in. I mean, the first thing he said, if I was a betting man, I'd bet. It's like you're actually inside of a casino where you've purchased houses that no matter what you do, whether you actually rent them out or they sit vacant, it'll pay out. It'll go cha-ching after you put in your slot money. So this guy isn't even like, in terms of like investing and taking risk, obviously we know that housing is the most unproductive investment you can make. But essentially, it's just become a casino for the rich. And that's why house prices are so expensive, is because guys like him who have bigger and bigger loans are just pushing up the prices as he hoards more and more houses. So yeah, continue. He's a betting man.
He's a betting man.
both Angus Taylor, the leader of the coalition, and Pauline Hanson, leader of One Nation.
Yeah, the Liberal Party. Oh no, Angus Taylor led Liberal Party. I'm shaking in my boots.
But the amount of stuff I have seen on social media from the Australian public objecting to these changes, there's a very, very good chance.
What Australian people are objecting these changes? It's literally a small minority of rich people who are very well-resourced and funded and have...
The mum and pop landlords with 1, 2, 3, 7, 8, 15 investment properties are objecting to these changes.
Think of the little guy. But also it's like, this is actually a minority of Australia. I'm pretty sure, I mean, they did polling. It was like 70% of Australians were very happy with these changes going into effect. So the fact that he's now saying it's a majority that don't support them is just, one, obviously false, but two, I mean, it's just freaking Murdoch press, dude. Like, you're not saying anything original. You just for the status quo remaining as corrupted and unfair as it is. Like, great.
The times that like it has kind of flipped back and forth a bit, where like a government would propose or implement a change to negative gearing or the capital gains tax, the pressure that they've received to flip it back hasn't been from the public. It's been from these dedicated lobby organizations like the Property Council or the UDIA or HI, whatever, right? All these nebulous, shadowy lobby groups. It's been the threat of them launching a big campaign, not like any kind of grassroots or organic opposition.
And the big one that Labor's dug themselves a hole with on top of the capital gains tax changes are the potential taxes on trust distributions at a minimum of 30%. That's going to affect millions and millions of people. And the vast majority of these people...
the trust. Think of the trusts. We went on Channel 7 News and he's like, oh, it doesn't even affect me because I own all my homes in corporations. It's like, businesses shouldn't own residential property, mate. Like, you've just outed yourself as a corporate landlord. I don't think too many Aussies are going to be like, yeah, mate, you got it right. Like, this is actually the way that we should be organising society. Just one guy owns a bunch of houses and squeeze the workers tighter and tighter. I love that guy. Thank you, Jack. You're doing the service to the community.
That's the thing about Jack, right? He I almost appreciate him because he unabashedly, without any kind of sanitizing or, trying to appeal to the general goodwill, or like what's generally good for people, he just kind of presents the interests of property investors as they are. He doesn't sugarcoat it. He doesn't try and make it sound like, I mean, he's trying a little bit here, but when you hear him speak, particularly like when he was on 7 with you, he was like not at all trying, or when he was on like punters, right, debating Richard, he was not at all trying to appeal to what may be good for the public, but merely what was good for like individual investors. And if you weren't an individual investor, well, bad luck, you should make better decisions. Like,
doesn't sound broken for you, but do you think it could be broken for people other than you that can't get into the market?
Not really.
So I almost appreciate him just being like the representation of the brutal cold interests of these capitalists.
Totally. I mean, we can give it to him that at least honest.
Yeah, he's honest. Yeah.
At least he's honest.
Yeah.
But I mean, if you then go into his arguments a little bit further, obviously you heard it on Punters Politics, like the supply argument was completely debunked and he was called out several times where he's like, oh, I don't drip feed supply, but maybe others do. It's like, we know they do. It's very well.
That's the thing with Jack. He's like Trump. You can tell when he's lying. Trump can't lie for shit. And Jack is the same. He's not smart enough to lie. You can tell when he's like just saying something because, I don't know, he thinks it in the moment it'll suit him. You can tell when he's being earnest and like earnestly representing his interests and whatnot when he's trying to cover for them. Like, yeah, with the supply stuff, like he doesn't believe that shit. Like he doesn't believe that. Like you can tell.
Yeah, you can.
Only got to look at what happened in New Zealand. New Zealand changed negative gearing, and only a few years later, it changed back. They've tried to change things in the past in Australia, and only a few years after they've changed back.
I mean, he's talking about the changes being reversed in 1985, and Adu, you spoke to that before. It's like, yeah, because there was a concerted scare campaign, and like it's our duty right now to not enable that scare campaign to win. Like, I mean, these changes don't even go far enough, but we're not going to be winding them back even further. Like they need to go actually completely be abolished. We don't need them. They're not good for society.
Absolutely. There's an inkling of, I guess, truth to what he's saying in that the reason why these campaigns, which do originate from these, very wealthy circles of lobby groups and whatnot, they do resonate with people. And the reason is because a majority of Australians are homeowners. And so while a majority of Australians aren't investment property owners, they do have an asset that is similar to an investment property that needs to appreciate in value so they can pay off their mortgage or whatever, right? Or not be in underwater. Or your asset value might grow and grow and grow and you'll have intergenerational wealth or whatever, right? But it is unsustainable for the vast majority of people, even if they are homeowners. And so I guess that's our job to convince them of such. All right, maybe we'll leave Jack alone.
Thank you, Jack.
Oh, podcast bro. I love podcast bros. They're so funny.
They're great.
So I kind of want to do Big Bros podcast.
Let's do it.
No one is going to buy an investment property today. And what does it do to rentals? It means this. There's 2.3 million rental properties. They're going to keep getting negative gearing until they're sold. No one is selling those. Because the capital gains tax, that means the tax you pay on the profits you make for selling, that's now much less attractive. So not only will I lose the negative gearing and not be able to get it back on the property I buy,
think of the profit,
because it's now finished.
Oh no, people aren't going to sell and buy houses anymore because of a tax change. Oh, yeah.
What are we going to do?
It's ridiculous. It's just vibes. It's vibes. It's not like, there's not really much to say. It's just vibes. There's no actual analysis.
I mean, it's all just vibes, but also the vibes are actually very much in our favor because the houses will remain where they are with or without an investor or a landlord. So this is where organizing is going to really need to take off, is like, we need to just start moving into those houses. Like, You need a house? I know where some are, and they are empty.
Yeah, exactly, yeah. No, that's the thing, like they're the interesting thing about the changes is that they've obviously kept negative gearing in the CGT discount for new builds. And so they're obviously trying to funnel in investment to new builds. And while I think it should be just eliminated across the board, I think there is a conversation there to be had about why these investor guys, they always talk about increasing supply. That's what we need to do. But if you actually look at the market and what it's been doing for the past 30 odd years, it's just been recycling credit flowing into the same properties. Like I'll flash up the graph now, but if you look at a graph of purchases of existing stock versus purchasing of new stock, after the 1990s, it flips. And now the vast majority of investment is in existing stock. It's just bidding up the price and exchanging and re-exchanging and bidding up the price over and over and over again of existing stock, not actually expanding the supply of housing. Whereas investment in new stock of housing is gone down. And why? Well, it's because we've given these investors, we've given them the game. We've given the game away. We're like, look, the government back then was like, we think that if we let these investors make rational economic decisions, if we allow them to have access to a bunch of credit, if we allow them to have all these amazing tax concessions and whatnot, they will make rational decisions in the best interest of the economy. And what happened? We've just got the recycling of credit and debt and all this stuff and bidding up the prices of existing stock and not investing in new stock. So when these guys are like saying like, oh, no one's going to buy property, no one's going to do this, great. Buy a new, like if you want to actually increase the supply of housing, get a new build. Like that is what you are saying is important. The government is now in a very small way incentivizing that. Put your money where your mouth is. I don't know. Like these guys whinge about that, about, oh, well, if these properties are not going to be negatively geared anymore, no one's going to buy them. Great. Buy a new build. Like that's the dream, I guess.
Absolutely. I mean, 82% of investors are purchasing existing housing stock. So it's like the numbers are clear. But also, I mean, these guys go on and bang on about bloody supply. It's like, you haven't even been delivering it, mate. We've had 25 years of these tax breaks and we're in a housing crisis. So where's your damn supply? We've been incentivizing you and you haven't been delivering. So sorry, you don't get any money more of your kickbacks.
I think the broader lesson here is that it's not trying to figure out a way to bargain with these investors to try and get them to funnel into a particular market, because they're not gonna. They're gonna throw fits and tantrums. The answer is public investment in public housing. That's the answer, right? Like housing is something that people need. And so the state, at least in the very, very short term, this is a minimum demand, the state should provide a significant portion of the housing market publicly. So because, why would an investor provide a discounted affordable home when they can not do that,
I mean, the goals are completely in contradiction. You can't have accessible housing for everybody while the private market is the keeper of housing accessibility, because they don't actually want you to have a house. They want to make money on having a house that they've hoarded, and you must pay a freaking out the wazoo price for access to this moldy apartment. So yeah, definitely public housing is where it's at. And we are so far behind as a country.
We're removing the capital gains discount so that housing becomes less attractive for investors.
Great, so if that's the target, then it's only going to be applied to housing, right?
No.
No.
No, so we're also removing the discount on shares, ETFs, cryptos, and any other investment assets, pretty much.
Wait, so you're making this change to try and decrease housing investment by also making it less attractive to invest in anything else?
Yep.
Get out of here.
That literally makes no sense. And it's not
that's the thing, like because investment is so tied up in housing in Australia, but if you change it for everything, it'll still disproportionately affect housing. Like that's the reality, because so much investment is already in housing, and so much investment will continue to be in housing because it is the bedrock of our economy. It'll disproportionately affect housing no matter what.
Making it less attractive to invest in anything else?
Yep.
That literally makes no sense. And it's not supposed to make any sense, because what they're not saying is that they just wanted to use this as a cash grab to fund all of their reckless spending.
Well, even like I think there's an inkling of truth here, where if we're expecting this to actually have a substantial impact on affordability, it won't. And the Treasurer's modeling says as much, right? Like the RBA says as much, the Treasurer says as much. It won't have a substantial impact on affordability.
2% decrease.
Everyone's saying that.
Yeah.
Yeah. Right? Like a 3% decrease in price growth. It'll still grow, just by less. Right?
Yeah.
But I think the point about inequity in terms of how people's incomes are made is much stronger than the argument that it'll have a significant impact on house price growth. Because there's a problem in this country where income generated through capital, through investment, through asset holding is taxed differently and unfairly compared to income generated through labor, through wages, through a typical salary.
I agree. And also the point of taxes is to take back some of that money that's been literally stolen through wages, because obviously there are big bosses who make a lot of money from the workers' labor. We get a little scrap, a little penny. And the point of taxing wealth such as this, and these changes need to go further, is to redistribute that money that we lost out because we didn't get paid a fair income. I'm so fine to not make heaps of money, but as long as my taxes are distributed in a meaningful way where I see public services, public housing, free education, free healthcare, like those are the things that I'm betting on. I want to live in a society where I can access that rather than literally exploit people by hoarding houses. Like, and this is the cultural shift that has to happen. We don't want to be a society that is rewarding the hoarding of wealth at the expense of the majority of workers who are literally making this society go around. You know? Like,
yep.
Who's doing
wage theft? Wage theft is the biggest form of theft in this country, in the world. And that's not even, that's illegal wage theft, right? We're not even talking about what you were speaking about, how, you know, the work people do makes the world run, and we are exploited for that work. And then now we're expected to pay exorbitant amount in rent, or an exorbitant mortgage that goes for 60 years or whatever, right?
Where else can't they squeeze us? I mean...
Yeah, right, yeah. Oh, that was the other thing as well with the intergenerational inequality, right? Just quickly. There is a point that, like, it is unfair for young people that the old tax settings are grandfathered in, so that, you know, the older generations who are wealthier get to still use the benefits, whereas, you know, after July 2027 or whatever it is, now it's not the case. But then the implication there isn't to then allow everyone to use the favorable tax settings. The implication is to not grandfather it. It's the implication is to, like, do it for everyone.
Scrap it, totally.
Yeah, get rid of it.
Grandfathering isn't the solution.
All I see this budget really doing is taxing people who have spent decades of their life, whether they're workers, investors, whatever, built wealth for themselves. They are now being penalised for that. I do not see how this budget is going to help young Australians enter the property market. And just to be clear, none of these changes have been legislated yet.
It shouldn't. We don't want people to. I don't think people should be. This is the whole aspirational bullshit, right? Like, it's so pervasive still that it's at the base of the problem we have. This idea that if you just give people a little leg up and you get them in the property market, everything will be fine. They'll be able to build wealth and whatnot. But that is the fundamental problem. So it's so investor brained, it doesn't actually have broader considerations about and a broader, longer term picture of what's actually happening here.
It's also just Australia's cultural obsession with housing as an investment, which is the fundamental problem with this entire structure. If we want to be aspirational, shouldn't our aspiration that everybody has access to a house? Like, that's where we should be going. If we're the country of the fair go is that people have access to public homes and we don't have to fight over crumbs and climb up a ladder that no one can get up. This is the fundamental failure.
I want a fair go at a 60-year mortgage. I don't know about you. The term picture
true.
of what's actually happening here.
I know you love paying the banks. Also, just some commentary on, like, the winners and the losers. It's just like the winners and the losers of capitalism. The winners are the banks, the property investors, the people who make a lot of money from everything being expensive, and the losers still are us. Like, you can't tax your way out of capitalism. Like, we don't, like, just even these changes are not even going far enough. Like, anyway, we could do a whole video on the freaking communist thing that was going on.
I've done many videos on such. Here's a 50-minute video on the CGT discount and why getting rid of it won't fix our housing problems if you want to subject yourself to such.
This is great. This is the full clip. Sunrise did not put the full clip on their socials. They cut it up.
Really?
to continue the fear mongering, but this is the actual interview, and Claire O'Neill is interrupted by the reporter. She's just trying to tell her point, which is it's grandfathered. It's still gonna give you your tax break if you want to build a house for Australia. And I don't know what that reporter's name is, but she's just like, well, we've got a messaging problem.
Existing arrangements grandfathered, future arrangements new homes only.
And then if you've already negative geared, and then you get to July next year, you can't continue to negative gear, can you?
Now, you can continue to negative gear. Existing arrangements are grandfathered. That means if you are already negatively gearing your property, if you already owned your property before budget night, you can continue to negatively gear your property. The changes are being made in a prospective manner. So that means that after budget night, if you want to negatively gear in the future, you can, but you've got to do it on a new property. Existing arrangements are grandfathered.
Okay, we've got a messaging problem here. Because
Australia budget papers.
You've got a messaging problem. I haven't got a literacy problem. It's your fault that I'm fucking stupid.
I don't understand it.
Yeah. Maybe we don't have time for a Get Rich with Rach, unfortunately. Maybe you want to do the Property Harley one. Let's do that one.
Oh, my fave.
All right, unless you've been living under a rock, the budget dropped last night, and I'm going to give my 2 cents like every other Joe Blow on the internet. Let's start off with negative gearing, which is out the window for any new property investor looking to purchase an established property going forward. Essentially, if you buy an established property from today's date onwards, you won't get any negative gearing benefits starting on the 1st of July 2027. That's when it kicks in.
I'm right, Jim.
You will still get negative gearing if you buy or build a new property, but as you know, if you follow my page, they're not always my favorite investment. Now, there's no surprises that the changes to negative gearing was grandfathered, and that means if you already own an existing property, you can negative gear that property going forward. Which isn't a shocker because the politicians that brought this budget in, I can promise you there's plenty of them that have investment properties and they currently negatively gear them.
Yes, it makes a good point.
True.
That is exactly why.
Yeah.
The politicians have a vested interest.
We should be not grandfathering it because it should be applying to all investors, including the ones that have done it for the past, 10, 20 years, like a lot of politicians, like Albo.
Like Albo. Grew up in public housing and now he's a householder himself.
Yeah, I know, right?
Also, again, just like he started, like, it's the same with this Jack fellow, I think. Oh, no, the guy who has 180 houses.
Eddie.
Yeah, Eddie, he celebrates that he grew up in public housing. And it's like, yeah, dude, that should be very normal. And don't perpetuate now inequality through hoarding houses. Like,
exactly.
He could be a champion for public housing.
There could be so many, actually maybe like, you make a good point about public housing and whatnot, being a vital social safety net and blah, 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 right? But think about it. Imagine how many more Eddie Deleens we'd have to put up with if we actually had substantial public housing. So maybe the greater good is that we have less Eddie Deleens and less public housing. Like maybe, I don't know, like it's a hard one to like think about. I guess we'll have to, how many more hours can we really put up with? Like, if for sure affordable housing and abundant public housing is fantastic, awesome. But like if I have to put up with more fucking Eddie Deleens on my For You page, maybe not. I don't know. maybe I'll settle for life in debt.
But again, if there was enough public housing, people wouldn't be investing their money in housing because it actually wouldn't be very lucrative because there would be actually a competitive option that's accessible to everybody that people want to live in.
Competition.
Yeah, we need competition in this market. We need some actual public housing.